All right, speculators, let's fire up the Futures Fanatic live stream for the afternoon here. Power Hour, last stream of the week. It is Thursday, August 21st, 2025. If I could get a quick one for picture and sound as soon as it comes in about a 20-second delay, that would be great. Looks like everything is working okay. I want to remind everybody that this live trade room is for educational purposes only. It's not really a trade room. It's just a stream of me talking nonsense and pushing buttons like a drunk monkey. The opinions expressed are those of the presenter, which will be me for the whole session. The most important part is that all trades should be presented as being hypothetical and should not be expected to be replicated in a live trading account. Remember, I'm trading prop programs here, which are sim accounts. Look both ways before crossing the street. Don't eat yellow snow, and don't run with scissors. All right, this is going to be day 3 and the last day until I do a full review of the Thor Copier. Yesterday was a bit of a train wreck. A lot of that is my fault. Spent more time with the software, learned a bunch more about it. My Kerpos going into this session is short 1 S&P. As you can see from the trade lines that I have connected here, I have been copying this in all of the various accounts. These 3 trades were profitable. This one is unprofitable. Going to have a planned add there at 64.04 as bulls come back and buy the afternoon, as we've seen recently. Had some great two-way price action this morning. Results over here, again, my Kerpos is short the S&P, and I am using extensively now properly set up the Thor Copier over here. Okay. Again, not going to do a whole deal on it here, but I have it set up much more correctly here today. Didn't connect to anything other than just Rhythmic and copying prop shop accounts as the primary copying today. So there's no other accounts connected. They call their accounts the user list, so I'm just connected to Prop Shop Trader here. I've actually had a great conversation with Leon this morning. He's the CEO of Phoenix, and they built this thing, and he's very open to some of the feedback that I gave him on how to make it more user-friendly and better and all this kind of stuff. So that'll be coming soon. So these are the account lists. I'm just copying account number 1 as the leader to 2, 3, 4, and 5. And the Kerpos here is short 1 S&P, as I mentioned. For those that care, I show this occasionally really quickly. Green across the screen in all of the PAs over here. And the accounts today were, now we'll see, it's potluck on this. I just turned on the copier, but I traded these other accounts this morning. We were just doing what we do, which is trade the Dow Jones. If you're newer to my stream and you're newer to prop trading in general, or if you're experienced and you're newer to my stream, quote unquote experience, but your experiences are negative in the sense that you are frustrated with these programs, you're not having success with them, you are funding accounts and then blowing them up before you take a payout, or you take one payout and then you blow it up, or you're generally stressed throughout the day, I would suggest that you check out the Prop Done Right ebook right over there in the bottom right hand corner. You can find it in the description down below. Comes with a 10 video course. It's all free as well. There's no upsells in except for to more free trading education. You can find out how to do this stuff correctly. If you come in and you think that micros are for pikers and you got to trade bigger and it's boring to see 13 or 15 or 20 or $30 loss or gain on the screen, even if it's being copied, then my stream is not for you. My message is not for you. But if you're willing to invest the time and effort and energy into doing these things correctly, you can learn the strategies pretty quickly, and then from there, you just develop your own situational fluency over time. Markets are dynamic. They're changing. They're fluctuating constantly. You need to understand the theory and logic behind the approach. Then once you understand the theory and logic behind the approach, you can come in and create your own matrix. Real quick look at some other markets if you care. The NASDAQ is hitting right up to VWAP as well. VWAP, when you're first starting out with the mean reversion strategies that I'm showing here, is not a target. Excuse me, is not an entry. It is only a target. This is called fiddling in the middle. So you short this at your own peril. Now, Rod, why are you shorting this here? Well, it's for educational and demonstrational purposes. And also, I had a couple times in which we were creating a chop channel here. So I'm going to continue to trade the chop channel until it breaks. So if I wanted to create a little offer zone here, you see these little swings right at VWAP. That's called situational fluencies. You have a framework that you start with. The framework that Rod told me, and if I listen to him, is when I'm starting out or until I've had some success. And by success, I don't mean a couple winning days in a row. I mean success where you are passing accounts, you are funding them, you are taking payouts from them, okay? Until then, stick with what I'm going to teach, which is the mean reversion strategy, which is you do not take trades at VWAP. I have hundreds and hundreds of thousands of withdrawals personally, and our community is now over 1.7 million in withdrawals. When you get to that point, then you can fiddle in the middle here. You can put on a trade in a flat VWAP here. That's the idea of situational fluency and being adaptive here. The other thing you could do is if you're trading this chop channel and it starts to break, just run a little buy stop. Okay, I don't generally put some stops in there, but I'll start to do it in here so you can just see, quote unquote, managing risk and really not allowing any losers to move very, very far. Is 398 completely discretionary? Yep, 1000% discretionary. It has no bearing on anything. I'm not measuring the distance between here and the next target. If you wanted something that wasn't discretionary, what you can do is come here to ruler, right? And you measure your entry from VWAP down to your target, and it's 39 ticks. I'm not very good at math, but let's call that 6 points. Ish. 7-ish. 8-ish. Let's call it 7 points. So if you wanted a 1-to-1 reward to risk, actually let's just do this today the way I'm just teaching it. 40 ticks. Let's call it 10 points. Okay? So we'll call it 10 points. Sorry, I was distracted by something there. We'll call it 10 points. I'm short from 34.94 half. Rather than a add here, I could put a stop right here. This is totally counter to how I would do this. But if you're first learning out, so there's a bunch of things going on here. One, and for those of you that don't follow my stream and don't know much about the strategies or what I'm talking about, thank you for being here. It does really help if you find any value from what I'm talking about. If you hit the like button, subscribe to the channel, all that good stuff. You can find more about this from that free ebook or the free 30 video course that I offer or all the free resources that I offer on my website. So go check that out. There's also a 3-hour workshop here called the Situational Fluency Foundation Workshop. It's right here on YouTube. You can just search for it. And there you will learn, hey, I'm not fiddling in the middle. So this is all hypothetical, right? Hypothetical simulated trading. Whether this trade works out or not, there's all kinds of things that I could do with it. I could add to it at the +1s. The +1s are always a level that you can take. I could run a buy stop there and get stopped out on a 1-to-1 reward to risk. I don't love the fact that these are both the same color, but they are. And if you want to add one more rule or layer to this whole thing, you're not even supposed to be on this instrument when you're first starting out. You're going to be over here on the Dow because the Dow is a more manageable. It's smaller point per tick, price dollar per tick value, if you will. So back to the theory and logic behind what's going on here. Now it's all laid out. Here's your target. Here's your stop. And that's one potential way to do it. The only thing I would suggest you do not do is use anything that's static or fixed. In other words, risk 5 points or 6 points in the S&P to make 10 or 12. That will never work long term. There's no edge that can ever sustain that kind of approach, because it has nothing to do with the dynamics of the market. It's not accounting for volatility. It's not accounting for volume. And by volatility, I mean, what is the potential range for the day? So you can use a fixed stop if you're going to take a percentage of a variable like a 7-day ATR. I've taught that a little bit. It's a little bit more complex. You don't need to do that. Just measure the distances between your targets and your entries, and then you will have a risk management approach that you can use. But ultimately, your risk management is to not really eat too much into your DRB. DRB is your daily risk loss. Your daily risk loss should not exceed about 10% of your starting account value. What do I mean by that? If your starting account value is $3,000, you can risk, or could use as a framework to start, 10% of that, which is $300. Okay? You grow your account to $3,500, you can use $350, but don't get much bigger than that until you're also finding what your capacity is for making money. You do not get to continue to increase your daily risk budget just because you're growing your account. I know that sounds counterintuitive, but you need to be able to continue to also increase the amount of profit that you're able to generate. Not all the time, but on a 3 to 5 days out of a rolling 22. That's how you create true risk-adjusted returns. I've seen a lot of new stuff where people are starting to steal and borrow what I'm talking about, which is great, but they're even fucking that up. Because they're starting to talk about risk per trade and how many trades you could lose in a row relative to your entire account value. And then they teach this nonsense of then you would just be accepting of the fact that you lost your account. What? If it was really my $3,000, I'm going to be accepting of the fact that I lost $3,000 because I was risking $250 per trade, and I knew I could lose 10 trades in a row and then my account would be gone. And what's the probability that I lose 10 trades in a row? I don't know. I never lose 10 trades in a row. Entry to exit, like ever. Never, ever, ever, ever. I've never. People will come at me about that. I'll challenge you. You can watch these stupid streams if you want. Come in here every day, Tuesday through Thursday. I don't know if I'll even have 10 trades on, but I ain't going to lose 10 in a row. You know why? Because I'm teaching a mean reversion strategy that puts us in the market at high probability areas. Is VWAP a high probability area for an entry? No. One more time. Is VWAP a high probability for an entry, long or short? No. Okay, so why are we in it? Why not? Because if I put my orders here and here, let's do it on the Dow Jones. Let me put an order in over here. See if we can get something copied. These are where we can enter. But it's in summertime. It's a little slow. We had great two-way action this morning. And I would put an order down here as a buyer, here and here.
Order pending.
Okay. Back to DRB for a second. Your daily risk budget is $250 to $300. Next question I get asked all the time, well, then how many contracts should I trade on micros? Well, back into what is a reasonable amount relative to not having any trade be more than 50% of your DRB. So let's do some other math. Your DRB is up to $300. You don't want to risk more than $150 per trade, and that's all in from start to finish. If you're campaigning around with micros, again, you could trade like a true professional, and you can campaign a little bit around price. Don't start with me on this bullshit about the transaction costs associated with micros and they'll kill you and slippage. You're just full of shit. Don't leave those comments anymore. I'm going to either delete them or I'm going to start just coming at you guys. Because, and I'm not referring to anyone who's watching this live or whatever, but I used to pride myself on not removing comments, but that's no longer the case. Because now, since I'm really trying to build my message and my social media following, me and two guys, we go through and look at them, And now on TikTok, between TikTok and Instagram and all these sources, there's a lot of different comments. And I really do appreciate all of them, because some of them continue to reinforce how important it is for me to get my message out, that there actually is a guy with the amount of experience that I have here on YouTube teaching, and I can enlighten the vast majority of idiots out there. Is it a mathematical fact that the transaction costs associated with micros are higher than the actual leverage provided by a mini? Of course. I'm not going to argue with that. But as I've said before, if you are not a big enough company to qualify for a volume discount on your healthcare, you can't complain about the pricing model. It doesn't matter. You're going to have to pay more. So we are at a stage in our career with these prop programs where they're small accounts where the only thing we can trade is micros. So our transaction cost as a percentage of the leverage that we have available to us is higher. But guess what? If you use copiers and then leverage across accounts, it's actually not. You're controlling the same amount of risk for about the same price. 70-ish% of the same price. Okay, we are short the S&P here, and it's farting around doing a whole lot of nothing. The good news, though, is our copier is working flawlessly today, flawless execution. And my tick blaze is flawless the whole session today. The only reason that I delete the comments is because they create a thread of more nonsense where other people are misinformed and keying off of those comments. That's all. I just do not want toxic negative loops to continue to get reinforced. So, and then that way I can just spread my message is trade micros, listen to me. Not trust me, just listen to me. If you trade a mini, it is not a matter of if, just when, you will blow up your account. You will have no success. Today, earlier, let me do this because I did it earlier today. So this is a real live account over here on Tastyworks, connected to Tastyworks. It has a balance, I don't know if you can see on the screen, of about $7,600. Okay, I use these as tracking accounts. Do I personally trade micros in my larger accounts as a professional futures trader who trades options on futures in the treasury markets? No. But for proof, for social proof, we're not only going to do the funny money stuff, which, by the way, 17,000 month to date in funny money payouts from these over here. So I love funny money all day long. But if you want to talk about tracking accounts with real money, this is an account with $7,600 in it. I call it a tracking account because I'm trading it and tracking it the same way you could if you deposited $7,500 of your own account, of your own money. This is connected to Tastyworks, okay? Tastyworks does not provide any day trader margin. I'm going to come over here to the S&P, which I did this morning, and go and try to place a trade. Again, there's $7,600 in here, okay? And I'll go to try to place a trade. And I don't know, again, if this might be being blocked. Oh, by the way, oh, was I on the right screen? Yeah, I was on the right screen. Okay. This account does not have sufficient buying power for one mini. Okay, end of story. I guess you guys are sort of picking up what I'm putting down there, right? But I can come in here and place an order to buy here at basically lows of the day, which I did. I scalped right here. This account, by the way, for anyone who cares, I don't cash flow it anymore. What I was doing is growing it and taking it out and growing it and taking it out. I don't have time to do any of that anymore. It started with 5,000. It's got 76, so it's got $2,600 of profit in it. But you could, on a monthly basis, take 5,000 and grow it by 1,000 to 1,500 maybe 2,500 as your skills grow. Risking no more than probably 500 to 1,000 on your worst month. If you drew down 500 to 1,000, you could cash flow those. What is the purpose of replicating versus just buying more contracts in a single account? The profit or loss is the same. Okay. Well, there's a number of things. First and foremost, there's a psychological aspect to this, which makes copying across multiple accounts and using leverage across accounts attractive. The bigger the number you see on the screen feeds into all of that, those chemicals that our brain produces, dopamine, serotonin, feared greed. So the bigger the number that you see on the screen, for many, many traders, it's more difficult to handle emotionally. Does that have anything to do with the math I'm about to describe? No. But that's a major factor in doing these properly. Now, in terms of the profit or loss is the same, it is. However, if it's contained across multiple accounts, you are not over leveraging yourself in any given account. So as I've mentioned before, if there was a prop program that you could buy, and there is, it's called Real Prop, the way it really used to work. Here's how Real Prop really used to work. I wanted to trade the stock market, and stocks are expensive, and I don't have enough money to trade Tesla and Facebook and Google and Microsoft and $1,000 stocks or what have you. Or in some cases, people were restricted even by the pattern day trader requirement. Many firms would say, sure, no problem. I was a huge trader at a firm called Bright Trading. You guys probably never even heard of that. It was based here in Las Vegas. But guess what? To trade at Bright back in my day, and this was a long time ago, everybody, the mid-90s, you had to come in with about $25,000 to $40,000. 25 years ago, 30 years ago. And then they would provide you the leverage on a first risk loss basis. So to quickly answer this question, it's not really the same unless you have the opportunity to just deposit a lot more money in a real actual account. And there's no prop firm that's going to give you all that money. So what we're doing is spreading our risk across multiple accounts using copiers, and now trading a $25,000 or $30,000 account with one mini or two minis expressed as one or two micros across 10 accounts. Please do hit the like, subscribe to my channel, because I'll probably continue to say that. I grab these little clips. I have teaching and training on all of it, but I want to get my message out once and for all so everyone understands this. It's completely different because you don't have that much money. If you have that much money, and I don't even mean starting with 25, because with 25,000, you could only trade one mini, maybe two, to be properly capitalized. You couldn't even trade the strategies that true professional traders are going to trade as they scale in and trade around positions. You'd need 100 or 200,000 of real capital. You would need the account sizes of Rips or Patrick Whalen or whatever, who took all of your money from affiliate commissions and put them in a big account and then use that to show or prove somehow that they're actually good traders. And unless you see their statements, by the way, I could do that anytime if I just wanted to trade two accounts against each other. I have accounts that have way more money than that. It doesn't do anybody any good. What does you good is staring and looking at this screen right now. A short with one micro at a level that you can eventually take with a stop and target that you would understand, and then copy that across 5 accounts. Your risks are contained, your profits are contained. See, because if you add all this stuff up that I have here, It's only about $10,000, $20,000 of phony money. All right, so we answered that one. By the way, I'll come over here real quick to go to, so I can take a little screenshot of the question. It was right here. What is the purpose of replicating versus just buying more contracts in a single account? So I'll stick over here for a second as we go through some questions. All right, there's the thing on my getup and my setup to have this thing in front of my. I'm using a Shure with. I need this thing to come down this way. I don't want it underneath me. I know there's all kinds of additional gear and things I can do better. I get a comment twice a week on when I just look up like that and the sound changes for a second. People lose their shit. Frago's asking if I take the same amount of risk on tracking accounts. And the answer is yes. I do not change anything, or else I would be fooling and bullshitting you and myself. Here's an account. I have more than 15 accounts at Interactive Brokers, between active trading accounts, trust accounts, my solo 401k, all these things. Here's one with $6,300 in it, also that starts every month at $5,000. I used to keep it at $7,500 to $10,000. I didn't even need that much thing. It's done 2 trades today for $60. Two trades for $60. So there you go. So there's one at Interactive Brokers. $6,300 balance. Okay. Do we want to come in and just drag this into price or wait for target? I'm going to put a buy stop in here.
Order pending.
Which definitely has a possibility of getting hit.
Order modified.
So I could resell up here.
Order pending.
All right, so that's how we are there. Let's keep going with the questions. All right, more comments on the microphone. No, honestly, dude, what is the purpose of polluting my stream with that bullshit? I mean, maybe you're trying to be funny. I really don't get it. It's one more thing I have to read that keeps me from getting to something that's useful. So there's a question about something called stop and go, which is something that it's a visual price pattern that's part of these brick wicks over here. It's not really. It's taught enough in the Futures Fanatic Foundation course, which is free and you can find on my website. Has to do with visual price patterns that these bars create. It's not something I'm really emphasizing anymore. Okay, so I've gone all in on range trader and stay in your lane. They're the way to pass these programs. It's a lot less intense on your brain and your brain processing power than trying to look at the visual price patterns associated with price action. That's a good one. I'm a notionally very wealthy trader. That one I love. All right. So enough of that was it with the comments. We'll just watch this on the way down. If you have any questions around trading, the vast majority of them are going to be answered in my ebook there. Okay. The ebook will point you towards a workshop that I did here on YouTube that will cover a variety of different topics. The importance of establishing a daily risk budget, the way to really look at markets in terms of volatility and volume and range. I don't know how many traders out there are first starting with what is the volatility regime as measured by the probable amount of range we're going to have in any instrument over the course of the session. You do that by understanding how to look at a 7-day ATR and then thinking probabilistically in terms of percentage of that range. Okay, we're still, anyone short the S&P with me here?
Order modified.
Put in MES if you're short the MES. Rod, you told us not to be short from VWAP. Nope, I was just outlining frameworks for you. I do have the captions turned on in every stream, by the way. Somebody pointed out a while back that they did need to listen to it, so the captions are turned on. You can access them if you want. All right, so this is a $125 trade, as you can see right here. If it keeps going, we could maybe turn it into a $150 trade. All right, someone's short the M2K from the +2. Friends trade natural gas, the NASDAQ, or the Russell, but I'm glad when it works out. Adams is saying he shorts VWAP only when the context is bearish. One way that we would do that is from the higher time frame. So remember, we are in a bear continuation pattern. So thanks for pointing that out, Dan. What we mean by that is we're going to take this arrow here and we're just going to point at our only moving average that we have on this chart, which just quickly identifies trend. If all price is taking place below this for the whole session, we call this a bear continuation pattern. So while that in and of itself does not make us bearish necessarily or only look for shorts, I hear that I'm a little concerned when people make those determinations. I understand the sentiment of it, but if you really, really, really want to advance as a trader, you will ultimately get into the mindset of allowing all possibilities to occur within a framework. So the framework that we're working with here is we're in a bear continuation pattern. So a good point of mentioning, maybe you could establish what Dams had just said, which was, hey, when we're in a bearish regime, as identified by something, I'm not sure if he's referring to his understanding of the range trader, but these trades here, as you can see, by the way, this would move way down here.
Modified.
That's what it looks like if we look at it on the two strategies, range trader and stay in your lane. And the way that I have my chart set up on other screens is these are kind of split, so you're not eating all that page real estate. You can kind of see both. What I could do is I should just turn this off here. So we'll turn that off and go like this. There, now you have it set up on both. Range trader is on the left, stay in your lane is on the right. I give all this away for free. If you want this entire TickBlaze desktop, that's what you're looking at right now is TickBlaze. You can get it totally for free. You just have to get on my list somehow. Get on the ebook list, check out the trade room trial. I don't sell bots, I don't sell indicators, I don't sell paid Discord, I don't sell software. The only thing I offer is one-to-many mentoring, which is my trade room, which is very similar to what I do here on the stream, with the exception of the fact that I'm obviously not discussing these concepts in detail because people have gone through the prerequisites and they understand the strategies. And in the trade room, we're just having a little bit more fun, and I'm pushing buttons like a drunk monkey across multiple instruments. Okay, so we're out there. I'm going to move this down to here.
Order modified.
Okay, 1, 2, 3, 4 wins, 1 small loss. Again, just single contracts. Oh, well, that's not good. So there you can see man, this will really not be great. If you see how I'm still in these positions here? And yesterday what happened with the copier was we got into this position where I do not know why that didn't take me out. But if I go to positions, let's see if I close them over here, if it will stay okay. First of all, I don't know why that shows that, because I didn't think I was in a position over here. It's showing long. It's not even allowing me to close anything. All right, I gotta
Position
capture.
synchronized. Position closed. Position synchronized. Position closed.
Okay, so at least it's not reopening the position. I don't really know why it's showing a position here, because you can see I only have positions in these 2 accounts. So interesting. I'm going to close them.
Filled. Position closed.
And just hope that they don't get reopened. So just to confirm, I was on account number 1. The good news is, nope, see, now they're open again. God dang it. All right. Well, I'm going to timestamp this for the folks over at... there was a buy stop there that should have... Because now the lead account is... God dang it. This is kind of annoying to me. I'm just going to flatten, close all positions.
Order filled. Position closed.
And I'm going to cancel all these orders.
Order
if you're running a buy stop on any other, or any kind of limit order on any of the other copiers, it handles this kind of gracefully. So I'm not exactly sure what happened there, but that's why we keep testing. The good news is it worked out in my favor. We got we got a little bit more profit out of the runners. All right, we got 7 more minutes until yeah, the Thor copier is available publicly, folks, but as I said before, and you're welcome to do whatever you want, just Google Thor copier. But by next week, a lot of these issues will be in the queue to be fixed. The software will be better, and I will have a better deal than you can currently get on the website. So if you just hold off and wait for me to continue stepping on my dick with this thing, and if you watched the stream yesterday, you really saw how bad it can get. So just hold off. Take profits, though, at the -1s there on the S&P. That's an area to take profit. And then we got the Dow Jones fiddling in the middle. Nothing going on there. See how we did hold VWAP on the NASDAQ. On the NASDAQ today, we did not get back down to what would be the... Let me turn this off here. I guess it's per instrument. So down here would be our bid zone. Okay, see, I just drew this, and then here would be my offer zone. I'm going to connect this high volume node. I know my head is in the way a little bit here on this one up here, but don't stress you out. I'll just move it over like that. Okay, so that's our bid zone and offer zone. The offer zone is here, right here. We take shorts or initiate shorts or take profits on longs, and the bid zone is down here. And if you're like, well, how did you draw those? That's interesting, whatever. There is some discretion, but naturally we're just connecting levels. But I showed you this yesterday. If you're not the type that wants to like or subscribe to my channel, or you don't ever want to put an email in anywhere and you want everything for free, I'm with you. No problem. Come to my website, tradersdevgroup.com, and type in any of the concepts that you hear me talk about. So for instance, I just said something like bid zone. So just type in bid zone, and I have an article here that you can read that's called Range Trader Bid Zones and Offer Zones, or the Fun of Drawing Rectangles. And it'll take you over to here, and you can read the entire article on what this is. I'm not trying to toot my own horn. It's hard to be humble when you're as great as I am, but I don't know anyone who's providing something like this. And with the advent of AI, as I said the other day, I'll be able to bust out these articles quickly. Keep asking the questions, because I can just put all the answers to them always in here and then always refer you guys back to my knowledge base. And then ultimately, this knowledge base will be a product that I do offer. The plan is to offer it for about $9 a month or $100 for a year. Why would you ever pay for that versus just searching the knowledge base? Well, of course, I'm going to put a front-end wrapper on it so it looks like my brain in your pocket. And when I say it'll do everything for you, I mean every possible question I've ever heard, every particular answer the way I would answer it for the most part, probably without all of the sarcasm and snarkiness. Although I'm trying to get it to be more snarky in its responses. I really am, because I want it to act like you're talking to me. It already has some stuff, whereas if you ask a dumb question, it really will say that's a dumb question. There are no dumb questions. There's a ton of dumb questions. Anyway, tradersdevgroup.com. Right there. We're probably done trading for this session, unless we see some sell-off into the bid zone, into the close that becomes juicy. I think we'd probably be done. Still seeing. So this would be a good example. If you knew that Thor was a copier, and you knew that I was here showing it, and you wanted to find it, and you were aware of something called Google, maybe you type in something like Thor copier. I mean, I'm just guessing. Thor is a trade copier. I've been talking about it all week. You can go back and watch some of the streams from last week. The most powerful thing about it, and the most promising thing about Thor as a project, it is not yet as easy to use or as efficient, and a lot of it's not its fault, because Rhythmic sucks and trying to copy Rhythmic trades and things is tough. But these amount of connections, so the market was in need of this. Hey, how do I trade, Tradeovate and TopStep, because TopStep got rid of Tradeovate and they only use Project X now, or I want to do multiple Rhythmic accounts and use just NinjaTrader. I don't want to learn a new platform, so I want to use NinjaTrader, and I want to connect and trade multiple Rhythmic accounts connected just to my Apex Rhythmic account on Ninja, and then I want to copy across 6 other accounts that use Rhythmic, like Prop Shop or Bullinox. No problem. You can do that. All right, so there's a question here around the walking through the thought process of not taking -1 around right here. Okay, so that's the question down there. Rod, can you walk us through your thought process about not taking -1? All right. I might have said I might have just moved this, and I think I moved it, or I just canceled all the orders. -1 is always a level. So I don't have a thought process around it other than I'm streaming. I have a positive day. We're going into the market on close. So a lot of the time, it's a good question. My thought process is not one that I would say is much benefit to. -1s is a level. Can always consider to take it. The fact that it bounced off it, who cares? I mean, that's just, we're channeling right here, right? But good question. We can see if -1s has any relevance on the range trader. So -1s was 63.85, 63.85. Not really. This is where I would be resting orders for the rest of the day, but the probability we have a 30-point sell-off in the next 10 minutes is probably pretty unlikely. So one of the things I'm working on also in the AI project, Rod's brain in your pocket kind of thing, is we get a lot of questions of similar nature in the trade room all the time, which is great. Got a couple hundred people in there. It's getting close to 300 on a daily basis. I'd like to get it to 500 or 1,000 people that are learning how to do this properly every day, maybe even more. You can go over to tradersdevgroup.com, find out about our 2-week free trial. Looks like we're now going to run something pretty permanent that if you make a decision before your trial is over, instead of $149 a month, you can get 3 months for $249 and then $99 a month after that. We're going to call it the fast actors, the people that can check out something for 5 days or so and go, you know what, this is for me. If nothing else, I'm not saying the strategies are for you or the approach is for you, but I'm saying you should be able to determine whether you're going to benefit from our community and from the frameworks that we talk about and from the accountability of doing these things properly. Okay, we got about 7 or 8 minutes left. If there's any questions left, I'm seeing some. Do you trade every day? Yes, Monday through Friday for the most part, if I'm not on vacation. The trade room is open from about 8:15 Central Standard Time till 10, 9:15 Eastern till 11. I'm usually a little late. I agree. Get it done. Buy a lifetime. I lose money on the lifetime, people. I'm not in it to make money. I'm not in the trade room and trading education to make money. The money from this is going to be made from the personal brand that I've established, so that I want to create as much value as possible and trust, so that if you're going to select a program, my code and my coupon for any software or for any prop program is much more valuable than using somebody else's. Now, support whoever you jam with. That's one element. The other element is going to be AI and other software products that I'm bringing to market that are around trading, specifically futures trading, specifically active scalping to cash flow and earn money from the markets in a predictable manner. So that literally you just clock in, make your money, move on. I'm watching AI extremely, extremely closely, and I don't see how it's really going to affect people that understand how to be proper risk managers and trade at high probability entries. Don't have to worry about slippage. You don't have to worry about the big boys and liquidity grabs and all this nonsense and bullshit that's being taught out there. Just learn how to manage risk appropriately. I know I keep saying that, and you guys think, oh, there needs to be specifics. I get a lot of comments about, what's your edge? You need to teach an edge, this and that. No, my edge is that I don't lose a lot of money and I don't lose it very often. There's my edge. Secondarily to that is the reason I don't lose a lot of money and I don't lose it very often is because I have taught myself how to be in the market at around the right prices and the right places. And I now have a skill that you could develop over time to be able to look at markets and truly see the matrix. Not entirely. Of course I lose. Of course I'm offsides and in at wrong positions occasionally. But I can quickly tell whether it makes sense to just exit that and get out and not mess with it, or whether I can manage around that. And the other thing is I'm sized appropriately, and you'll learn to be sized appropriately. So you can take heat. You can take some heat. You can trade around positions. You can hold for bigger targets. You do all that by being sized properly and using the proper instruments. Okay, we got 3 more minutes left. Nice little chop going on in here. Thomas is mentioning great value for being a lifetime person. If you find your way over to what we do, take a trial, join however you'd like or not. But for those that are really fans of what we do, I want to remind everybody that I want to share the wealth with as many people as want to promote what we're doing here. Because what we're doing here really is changing lives. And I've mentioned this before, until 2019 when the micros came in, and until shortly thereafter where, because in 2019, 2018, I was trading with 2 firms, Top Step and One Up. And I was trading with them just because I was interested in seeing how this little world was going to in 2018, I also had about 70 Bitcoin. So I wish I had 70 Bitcoin still. So prop trading was not my focus at the time and following these programs. But my education and things before that, when you had to deposit your own money and when you had to trade a mini, this stuff wasn't working the same way. I couldn't, people were not properly capitalized. But this has all changed. You have dozens of prop firms to choose from that cost you next to nothing, some of the accounts. And they cost you next to nothing because 90% of the people participating in the programs are not doing them right and are funding everybody else. Don't be that person. Be on the flip side. But getting back to the affiliate thing, if you want to spread the word, you just have to become a member first. You can't be an affiliate if you're not a member. Join TDG, get with one of our advocates, Brad, Steve, or somebody else, and they can hook you up in the affiliate program. And I think the commissions start at 10 or 20. They can go as high as 30 or higher. We really get these things going. I'd be happy to do a program where if you refer somebody and you generally refer them, I give you half of what they spend if they become a lifetime member. Okay, that'll be it. That's 1 o'clock there. Okay. Thanks, everybody. Have a super weekend. If you want more of this, then why is that happening? If you want more of this, if you can't wait till Tuesday for the next stream, go down, find out how you can join the 10-day trial, and we'll see you tomorrow for our Fun Day Friday. Stay green, trade like a minute, everybody. Be good. Bye.